What's up everyone? Welcome to my latest video talking about my new position sizing and how I am doing at the end of today. It's the first day of the week. So pretty much a lot of it was unchanged positions, but I'll show you a few things that I tweaked around and how I'm looking going into the rest of the week. This week is a little bit of a special week where we have the Federal Reserve Chair Jerome Powell talk thrice, so that will be very interesting to see what he has to say. But before I get into my positions, a few quick notes. I'm not a financial advisor, and this is not financial advice. This is not meant to be a comprehensive research, but just to show you how I am positioned in the market. So please do your research elsewhere. And I do close my positions with no warning and very quickly. So here's how my portfolio is looking like. As you can see, still pretty tech heavy. Again, towards the end of the February, it was very rough as especially the tech stocks just kept going down. I used that opportunity just to rebalance, sell off some of my winning positions, and I added to some positions that were significantly at a loss. And I'm pretty glad I did that rebalancing over that volatile period. So how I'm positioned is ARKK, which is my absolute favorite ETFs. I did a video of it over the weekend, so please watch it if you can. I still have a pretty big exposure to ARKK in both shares and calls, which is about 10% of my portfolio. QQQ, which is under 70% of my portfolio. And I did chart out their performance over the week, over 3 months, and the year. And as you can see, February, we did have that big, huge abnormal dip. Even the 3 months, you can see the volatility that started cropping up somewhere towards the end of February. I don't think we are out of this yet. I still think we are going to be in a little bit of choppy, turbulent markets, at least this week, if not next week, at least getting into April. So we'll see how that goes, but as you can see, the 3-month chart clearly tells us a story, especially with the tech-heavy ETFs. I also hold calls and shares in BLOK, which is my exposure to Bitcoin blockchain-based names. It's about 2.5% of my portfolio. I do have both shares and calls. And I actually added some shares to this today, because there was a pretty big dip today at some point, and I think it actually closed very red. So I'll continue to monitor the situation, maybe add to it if it falls further, but it's only about 2.5% of my portfolio. I'm pretty happy with some of the names in there, like MicroStrategy and Square. So I'm not too worried. I don't anticipate this ever becoming more than 5% of my portfolio, but I'll probably get it up to 5, and then maybe even 10. We'll see how it goes. I still have my big bullish exposure to tech, which was pretty rough in the last month or so, because I do have some puts on the 3x inverse ETF, so that's how I'm very bullish on tech. This is less than 10% of my portfolio, if you will. This is like the speculative portion of my portfolio. So here, as you can see, towards the 1 week chart does show a nice we did see that tech was down. So I have put, so I want these two to go down. As you can see, over the last week it's come back up because the tech went down. So I'll continue to monitor this. I do have some long dated put options on both these, so I'll see how that goes. But as you can see, the long-term trend is pretty much still negative. But given the interest rate issues that's currently going on, I'm skeptical how this is going to behave in the next month or so. And there's really no price to these ETFs. They really rely on direction. If the direction is down, they pretty much will keep going down in value. But if the price is volatile, then it's a little more uncertain, but they really rely on a directional trend. And having puts on them makes, I'm just betting on that trend either to be what I want them to be, or just to have a a little bit of an uncertain trend so that I can still make money on it. So that's how I'm playing this. I still have a little bit of a bullish exposure to real estate through puts on their 3x bear ETF. It's less than 1% of my portfolio. I will wait for another time when real estate again takes a hit, and I might actually add to this position at some point in the near future. Then I have one of my absolute favorite sectors, which is the biotech sector. I have a very bullish exposure to this sector through calls on ARKG, which is the ARK Invest ETF's genomic ETF. As you can see, it's been pretty volatile in the last 3 months. You can definitely spot this dip that happened in February from like basically what was just an uptrend till that point over the last year. And then the weekly chart, there was definitely a dip towards end of last week, and it's picked back up on February and today. So fingers crossed. Let's see how this goes. I have some calls in this, and these are long dated calls, so I'm really not that worried about what's going on. And these are actually in the money calls as well. So not losing a lot in premium if it's not going the direction I want. So I'm pretty okay with this call. I also have bullish exposure to biotech via puts on the inverse ETF LABD. As you can see, over the last year, this ETF has lost about 90% of its value. The near term, the weekly chart does tell a different story. The biotech market generally dipped towards last week, which is why this ETF just shot up significantly. But as the market has started to stabilize and go up, we can see this ETF fall. So I'll see how this goes, but the biotech exposure is just a little less than 7% of my portfolio, so that's not too bad. I then have slightly bullish positions on the markets via a put position on UVXY. This is less than 2% of my portfolio, but these are some long dated in the money UVXY puts. I don't anticipate on selling them anytime soon. I'm actually high up quite nicely on this position. So I'll see how this goes. If there's a spike in volatility in the near future, then I do anticipate adding on to this put position in UVXY. And then I do have a hedge position, SOXS, where my shares did lose significant value as the markets kept going up, especially the semiconductor kept going up. Today I took the opportunity to add to this position. So typically this is a insurance policy for me. I'm totally okay losing this money. As you can see, it's less than 0.1% of my portfolio. But this is really just to let me sleep at night. If the market really tanks tomorrow, this position will shoot up and at least make sure that I have some money. So it is what it is. I'll keep eyeing this position and see how the market behaves. My goal is to actually build this position out eventually to be over 1% and maybe even more as I get through this. But this is really that hedge I'm building in case of a near-term market dip. So that's where I'm at today. I don't anticipate I'll do anything heavy tomorrow unless the market really is volatile, giving me an opportunity to make some trades. If not, I will do some rebalancing towards the end of this week. If you like my videos, consider donating to my Bitcoin wallet. I am in the process of upgrading my equipment and making some better quality videos. So hope you like it. Subscribe to my videos, like my videos, get notified on new videos, and I will catch you on a new video soon.